What's up, guys? We're about to get started right now. Hope you guys had a good weekend. Let me get this pulled up real quick so we can get started with this. This is probably my most favorite one that I'm doing so far. When I was putting this one together, I was like, oh, I really like this one. So there's a lot of good information that we're going to go over. Okay. So if you have questions, let me know in the chat. No Dark Knight. Dark Knight. You haven't been here in a minute. This is normal now. I'm just kidding. But so let's see. I got all my notes up here. If you have questions, let me know in the chat. Let's see. Okay, these are the things we're going to be going over today. So building a trading plan. Obviously, you need to have a trading plan to be successful in trading. It's like the same thing as wanting to open a pizza shop and not having a pizza recipe. That's like, it's the same type of thing. It's like if you're trying to build a business and you don't have a business plan. This is a business plan because trading is a business if you treat it the appropriate way. So it's reckless to trade without a trading plan. So first thing we want to go over is strategy. What is your strategy? So I've heard of, you guys all know that I do the break and retest. That's a pretty common thing. You could do breakout trades, you could do other things, but the break and retest is really where I thrive and I like to trade. That's really the only thing I trade. So I've heard people in the chat say they do the 9 EMA, 21 EMA crossover. That's cool if you do that. That's fine. And if you want to continue to trade that way and it works for you, whatever works for you, that's the whole point of this strategy part. So this is finding your edge and creating something as your own. So basically what we're going to go over here is I'm going to put here. Create your own strategy. Like, I'm sure you guys have heard of different strategies. Like, I can name a few if you want me to. Like, the squeeze strategy by Simpler Trading, a breakout strategy where you see it goes over $64. You're going to take calls over $64. There's plenty of different things that you could basically categorize as your setup, right? And this really comes down to your own personal wants and just kind of what you want, how you want to trade and what works for you. So I'm sure people are going to go through plenty of time where you're going to try a bunch of different strategies. I had that ordeal and I went through that whole thing where you're going to basically try out a bunch of different strategies and see which one works for you. So that's basically what I'm talking about. So you're going to try out a bunch of different ones. Mine's the break and retest, so you might as well give it a try if you're coming to this webinar. See if you even like it. So something that works for you, right? Then you're going to dive in even deeper to what you're going to be doing. And let me know if you guys have questions too in the chat. But so as for factors, so what are the factors you're looking for when it comes to entering into a trade, right? Okay, so let's look at, we'll use the break and retest strategy as like an example, but like what time frames are you looking at? What criteria? So like if you're a breakout trader and you're going to say, I'm going to take calls over $100. So stock goes up over $100. What confirms that? What makes that an entry for you? So like if you use the MACD, does the MACD need to be curling? Does it need to be crossing? What does it need to be doing? If you're using different indicators, that's an easier way to describe this. But maybe you need to see a hammer at support. That's a factor that must be in play when you take a trade. There has to be a squeeze on the play, on the squeeze indicator. RSI has to be oversold, whatever you want that to be, right? That's what you create this to be. Okay, so like these are just some examples. I'll put that. So like indicator conditions, what you need to see price action doing, uh, how it reacts to a level, EMA's crossing is another example. So whatever this is for you, what you have to see to consider your edge. Like this is what your edge is. So like your strategy is I'm going to only trade break and retest. Okay. What do you need to see? What are the factors you need to see? Maybe a 4-hour close over your level before you take an entry. Something like that. What do you need to see the stock to do? So this is your overall plan. Like this is the type of trades you're going to take, and this is specifically what you need to see in that stocks environment to actually end up taking the trade. So like based on indicator conditions, price action, and so forth. If you have more questions on that, let me know. So we're going to move to timeframes. So this is probably the biggest thing. Like I know I taught a few weeks ago about multi-time frame analysis, looking at all different types of time frame to confirm your trade thesis. So typically you look at the bigger ones for confirmation of where the trend is going, where you think the stock's going to go. Okay. So then you go to the lower time frame to see that further and make sure that you see, if you're looking for calls, you're looking for bullish signs on the lower time frame. If you're looking for puts on a stock on the bigger time frame, on the weekly time frame, for example, you want to see the daily time frame look bearish as well. So this really is what's the main time frames you're going to be looking at. So like I went over this and I put this in the education tab where we typically where I put information and stuff to learn from. But so this is like if you're a swing trader, day trader, scalper, what are you? So basically this is asking the question and defining yourself. So then that way you're not going to be caught, oh, I'm day trading now. Oh, I'm going to take a swing trade here. I'm going to take the scalp because it looks good for this moment in time. No, you need to just pick to one type of trader. Define yourself. Like pick what type of trader you want to be. And this obviously comes down to how often are you in front of the screen? How patient are you as a person? And really just numbers of factors of your day-to-day life. What's going to make trading the easiest for you? So like if you work a 9 to 5, swing trading is probably going to be your option. Day trading, if you can periodically check your phone when alerts go off, you could be a day trader. Scalper, you got to be paying attention to the market and sitting there watching it consistently. So that's kind of what you want to look at there. Okay, so are you swing trader, day trader, scalper? Next thing you want to look at is once you define this, you're going to go into what time frames you look at. So like a scalper is going to look at anything below 15 minutes. So scalper below 15-minute. As for day trader, I would say personally, I day trade. I like seeing, and I personally use the 4-hour, 1 hour, and 15-minute. Sometimes I use the 3-minute just for extra confirmation, but I'm mainly using 4-hour, 1 hour, 15-minute to confirm it. So I went over this in the other class. If you're not understanding the multi-time frame analysis, you need to go watch my other class. So, but yes, this is the basic idea, right? This is what we're looking for. Day trader, you could say 4-hour to the 5-minute if you really wanted to. And then this is really up to discretion. Whatever you like using, you can, but this is kind of some guidelines for somebody that's new, right? Swing trader, you're looking at weekly to probably the lowest you're going to go is 1 hour to get an entry. So this is what you're going to be looking at, trying to decide what type of trader you are. And basically, how you're going to base this is once you do this, you're going to have bigger time frame is going to confirm bigger time frame is basically going to confirm, what's the easiest way to put this, is going to confirm the overall picture, right? Then we go to smaller time frame. I'm also going to add here pick 3. A lot of times people can be overwhelmed on the amount of charts that you look at. So I'm saying if you're a scalper, pick whatever time frames you like the best. I chose 4 hour, 1 hour, and 15-minute. Those are my time frames for a day trader, right? Swing trading, you could do weekly, daily, and then hourly chart. So we'll call this medium time frame. Extra confirmation, right? Okay. Small. Okay. Entry. So we've gone over this before. Get more in depth with it if you need to on my page or on the webinar recordings tab called multi-time frame analysis. But this is basically what I mean by time frames. And this is going to help you pick and decide what you're going to be doing, right? And how you're going to be entering the trade. It's going to be the same every time. You're going to find your overall picture, what makes you even want to take this trade, right? And then your entry time frame, basically. That's how you're going to go about this. Okay, so now we go to entry. What do you need to see for your entry? Let me know if you guys have questions, and if all this is making sense. So what do you need to see for entry? So basically what I'm trying to say for this part is you're going to want to see some sort of basically, the easiest way to put this is what time frame you're going to be using for this, and then also what conditions you need to see as well. Okay, so a good example of this would be volume. I need to see high volume on this rejection candle to take puts. I need to see high volume on this bounce candle to take calls. So your setup's already happened, then it's coming to your entry, and you go to your entry time frame. It comes to the entry time frame. What do you need to see there? Is it a hammer, bearish candlestick formation, bullish candlestick formation? So a pattern. Let's see. What else do I need to see here? And volume is an example. And honestly, there could be more things depending on your trading style. This is just like a basic overview of like how you should structure your trading plan. I'm not going to give you exactly what to put in it. I'm just giving you create your own style, make a mock one. Even if you feel like you don't know what you're doing at all, just run through this webinar we're doing, make these factors for yourself, and then just have a plan, follow it. And as you see it develop, as you take these trades and use your trading plan, then make tweaks after you've seen things that you don't like about your plan. Make it better. It's a work in progress always. It's like a business. It's not going to be perfect right away. It's a work in progress. All right. Okay. So this is for your entry, right? That's what you're going to do for entry. Stop loss. What are you going to do for stop losses? You're going to go and say, I would say for beginners, easiest thing is you could go percentage base. So you could say, okay, I'm not going to lose more than 20% on the trade that I take, right? I'm not going to lose more than 15% on any trade that I take. You're gonna structure every trade this way, so you know how much the size, and how much you're going to lose before you go in, and then you can create your risk reward based on that. So this could be percentage based on the charts, or dollar amount. But this needs to be consistent, especially if you're a new trader. Easiest for new traders, percent based. And then you can move into actual charts and using it that way. And my recommendation, or well, what I started doing when I first started uh, doing my stop losses, I use it based on the chart currently, the premium charts. But when I started, when I was newer, I would just do a 20% stop loss. It would keep my losses small. And you need to do it relative to how much you're actually making per trade. If you're only making 30% on each trade and your stop loss is 20%, you're going to have a hard time being profitable. It's all about having that good balance. You want to have at least 2-to-1 risk reward ratio. So that's how we go for stop loss. Ethan, that's just part of the game, man. That's part of the trading game. Best thing I can say is keep your losses small, because I'd rather get faked out on a trade than thinking I'm faked out and then end up losing 50% of my position. So you just need to, you as a trader, you are not a stock or chart analyst. You are you are in part, but mostly you are a money manager. You're managing your money the most effective way you can possible. So keeping small losses is more important than getting faked out on one trade every so often. I got faked out on 2 trades last month, or 3, and I got back in 2 of them and ended up being profitable on the day because I kept those losses small. So if you're just scared, that would just be classified, I guess, as scared of taking a loss. At least that's how I used to be whenever I would think that way, because I definitely did think the same thing as you. But it's money management over everything. Hopefully that answered your question. Let me know if it didn't. But you got to be more focused on managing your money. Profit targets. Let's see. So profit targets, here we go. You can do this based on charts, based on percentages. That's real, or dollar amount. I don't really use dollar amount for any of these personally, but I know people that do. So basically, based on the charts, I do this based on the premium chart and the actual chart that I'm trading. That's how I do it personally, based on percentages. This is good for new traders just to build consistency. So like if you have a 20% stop loss, I would say the first place you want to trim is 40%, 50%. That's how I started doing it. But I usually look for bigger moves. So that is part of it. That's how and yeah. So these two need to correlate, as in this needs to be your profit target. If you're planning on making $40 on a contract, you need to be looking to lose less than, or $20 or less, based on your stop loss. So that way you can have twice the amount of losers and still break even when it comes to this. I prefer 3-to-1. I like making $60 on a contract and losing $20. I would take that trade, but I probably wouldn't take the trade that's 2-to-1. Maybe if it looks really good, but the bigger risk to reward, the better. So that's how I would go about this. So I would say something like 40% trim, and then take another more off at every 20% increment and just continue to scale out. That's how I do it as a beginner. Risk to reward strategy. This is what we've been talking about between these past 2 things we just went over. How much money am I risking versus how much I could potentially make. Okay, so a good example of this is the trade on Friday. Um, we played puts on Friday. We saw that the market was doing a break and retest, so I got in, and I went in fairly heavy. Now, the interesting part about this is that okay, hold on. I need to add one more thing before I start rambling about this story. You need to make sure you have this on here. Max loss dollar amount per trade. Okay, so this will help you pick your stop loss, right? So, like if you say, I'll lose 20% of this position and the contract is $100, but you are only, let's say, like your account, this is how I do it based on 2% of overall account. So, if I have a $10,000 account, my stop loss for that account or my max loss I would lose on any given trade is $200. That's the most I would lose, 2%. If I have a $100 account, the most I can lose on that is $2. You're going to say that's really low. Well, you probably need to have a bigger account than $100 to get started. Not to get started, but to make it easier on yourself to do this. Okay, so let's say you have $1,000 account. You can lose $20 per trade, right? Pretty simple. So that's how I base how big a size that I'll go into a trade. So like on Friday, the contracts were $20 or 20 it was a $20 risk that I was putting on for the trade versus I was looking to make $90 on each contract. So that's almost a 4-to-1 risk reward ratio. So my stop loss was less than like I think it was about 8% on the total contract. So I could size way heavier in this trade versus a trade where my stop loss had to be 20%. So that's how you can know to size heavier into a trade. If you say, okay, let's do the example of a $10,000 account. You have a $10,000 account, you can lose $200, right? Okay, so say you're willing to lose $20 per contract on this given trade based on the charts that what you see. Okay, so that means 20 goes into 200 10 times. So that means I could buy 10 contracts of this trade. So potentially in the scenario that we were just talking about from Friday, I'm risking $200 because that's the most I can lose in my overall account to make what is that? $900 on the total trade by the time I hit my first target, right? That's how I'm going to structure my trades. And so like let's do another example. Say you have a stop loss of $40 per contract. Again, you can lose $200 per trade. So you will purchase, what is the math on that? It's not going to go in evenly. Wait, yeah, well, you can buy 5. You can buy 5 contracts. So that would be 200. Don't quote me if I'm wrong, but that's close enough. 5. You can buy 5 contracts and take that trade. So that's how you want to do this. And that's how I size mine personally. I can lose a maximum of 2%, right? 2% of my overall account. That's how I do mine personally. Okay, so something to add to this risk to reward is that you can lose a max of 2% of your overall account. Now, how much can you make on every trade? That's what you want to look at. And that will tell you how much you can make per whenever you get into a trade. Like for the example from Friday, if you had a $10,000 account and you took the trade that we took, you could have bought 10 contracts and had a stop loss $20 below your entry, and you could have made $900 based on that example versus risking 200. Money versus money. How much you can make, how much versus you lose, right? So that's what we're looking at. when you do the strategy of 2% of your account, right? That means you can lose 50 times in a row before you blow your account. That makes sense? Okay. So now, like, you've given yourself plenty of opportunity to be right. You've given yourself plenty of opportunity, plenty of chances to keep yourself from blowing your account. That keeps your losses small, and that if you go on a losing streak, it won't hurt you that bad, right? Just being conservative and being good at managing your money. Okay, how will I trim profits? Pretty close to the same. Profit targets, we did kind of go over this, but how I'll trim profits. So, like, how much will you trim at your first profit target? Will you trim at your first profit target? I do. I do percent based on number of contracts. So, like, if I had, let's say I bought 100 contracts, and I go into the trade, I'm in 100 contracts, and I say, okay, I'm my first profit target, I'm going to trim 70% of my position. Okay. I trim 70 of my 100 contracts and take profit at my first target. Okay. What am I going to do at my second profit target? I'm going to take off another, or I'm going to take off half of that. So another 15, basically, another 15% of my contracts. I'll take 15 off the table. Then what am I going to do with the last? I'm probably going to let it run and see how far it goes, right? Let it run to the end of the day, swing it if I really am confident in it. But that's how I would do that, or that's how I really do it personally. But I like to stick to the 80% mark. I trim 80% of my 80% of my contracts at the first profit target, and then trim some more at my second, and then let the rest run. But that's completely up to you how you want to do it. So we'll put second, third, etc. How are you going to continue to trim at your targets? What are you going to do? How are you going to take profits? And if you really wanted to, you could be like, I'm going to trim 20% of my first target, or whatever it is, and continue to, if you're, depending on if your target is very modest, like if it's a close target, like 15% or something like that, you better not trim very much, depending on your stop loss, right? Unless you got a 5% stop loss on all your trades. But okay, contract selection. We've gone over this in the video, option contracts video. So I'm not going to go into depth explaining this. This is just literally what options contracts are you going to pick. What contracts are you, or better way to say it, how will you choose your contracts? Okay. That's that. And let's see, last one. Extra rules. So this one more so is just for yourself. Like, one of my rules that I have is I won't swing into economic data. Like, we got CPI coming out this week. I won't swing into that. What's another one? FOMC. I will not trade before the Fed meeting on the day of, and I'll trade lighter on the days prior to it, just because it tends to be choppy and no good real directional moves. what's another one? If I lose 5% of my account on the day, I'll stop trading for the day. That'll be my lockout number. Yeah, those are some of my examples. Those are really all the examples I got at the top of my head. But this is what you guys can take a screenshot of this. I'm actually going to, and then going to post it in the chat. But you guys have any questions, any comments, anything that you're wondering about that I could help you with? Do I trade on earnings? Not really. I'm not a very high risk trader. And I also think it's the same thing as gambling, really, when you trade earnings. So no, I don't really. That's kind of one of my rules that I stick to. If I trade earnings, I'm gonna literally just trade something that I don't care about losing. Like I'll forget about it the next day or same day, hopefully. But yeah. So not really. Is there any other questions? Any other questions you guys got? How do you react if the market does give your targets? I trim does not. So what? Like it hits my stop loss? That's the only two options I got. It hits my target, or it hits my stop, or I sit there and patiently wait.
It's almost like the Tesla call. So I bought on the retest, right? And it only went up a little bit before it went down. So it didn't hit any of the targets. I was waiting for it, but it never got there.
Well, then what'd you do? You got stopped out?
No, so I just took it, whatever the market gave me. It was not like 40%, maybe at like only 20 or 30%.
Well, but think about that if you do that over a course of 10 times. How many times do you think you're going to end up taking profit too early?
Right.
Like think about this. You lost 10% on that trade, right? Like you were waiting for it to hit 40%, so you took it at 20 or 30.
Mm-hmm.
So let's say it was 15%, just to call it even.
Mm-hmm.
And the next 10 trades, you do that 5 out of the 10 times. And then the other times you wait for it, or then in a different scenario, you follow it exactly and you take profit at 40%. You'll end up still making way more on the times you followed your plan versus this one time you got lucky and made 30 bucks. I know it sucks to lose money on one trade, but in the long term, if you have a solid plan that's written out and ready to go, and like you're actually implementing it and using it over the long term, you're going to get paid much more. Like,
Mm-hmm.
like for example, that trade on Friday, I trimmed early because I was in a lot of contracts, but I trimmed early. Ended up being going from my first target was 3. I trimmed at 260. So it was 30%, like you're talking about, and it should have been 50. And then what the worst part about it is when it does go in my direction, I took my first trim. And then so you say you take your first trim at 30%, you leave some on the table, you're probably going to take another trim at what, 50% when it hits your first target, because that's where you thought it was going to go anyways. And then think about all the gains you lose out on versus when if you trimmed at that 50% and then you left your runners you would have been a lot more free with. You would have let them go to 100%, 150%. Does that make sense?
Yes, thank you.
Yeah. It's just more important, honestly, to just stick with your trading plan because it's going to end up hurting you in the long run. I promise you. I learned that for the longest time because that was my biggest problem, taking profits too early. Did it all the time. I still have a little bit of an issue doing it, but really that's what's ultimately going to cap your potential. Like it might be like for me, that's what I decided that was going to cap my potential if I did not fix it. So I had to fix it. And my my gains grew so much larger because I just let it play out. And just, and a lot of the times you're going to be more, if you have a solid plan, you should be right more often than you're wrong. There's going to be times when you're wrong, and you just got to deal with it, I guess. That's all I've One of the biggest things I've realized is trading all comes down to fear. Think about any decision when you're trying to make a decision outside of your trading plan that you had written down when you got into a trade, and think about, is this from fear anyway? Does this make me make you just, am I getting out of this trade, or am I taking profit early because I'm in fear of losing money? Or am I in fear of this? Am I in fear of that? Like, it literally all comes down to being in fear. So, and that's what the plan's for, to get out of all those fearful decisions. Taking profits is a result of fear. Moving your stop loss to lower so you don't get stopped out is because of fear. You don't want to get stopped out, because you don't want to be wrong. There's numerous examples. Pretty much everything in trading comes down to fear. A lot of the times, the fear of losing money. So if you figure that out, you figure out how to maneuver through that, it's going to help you tremendously in your trading. It's not going to be perfect all the time, and you just got to get better at it. Any other questions for me? If not, I'm about to head out. I'll put this on the education tab, and yeah, I'll have this ready, this webinar up soon. All right. All right, guys. Have a good night. I'll see you for the markets tomorrow.